Hello, everyone. This is Jillian Verdun from JMV Financial Services, your profit strategist, bringing tips and tricks to improve your financial situation for the new year. Thank you again for joining us. And as our other episodes, this one's going to be short and sweet. Today, we get to talk about to lease or to buy. And that is a question that I get numerous times. So that's what today's episode's going to be about. And so let's get started. It says, one of the questions I've been getting a lot lately is it better to lease a car for business purposes, or can I claim the lease payments on my taxes? The short answer is yes to both. The more detailed answer is, but there are caveats to how you can claim the deductions. Leasing a new automobile is a great idea if you put a lot of miles and wear and tear on your vehicle for business travel. But as with most tax issues, there's a lot of mental wear and tear that go along with how to list these deductions. So today I'm going to give you the basic rundown on how to best go about claiming the lease for business purposes on your taxes. Number one, keep detailed records of the business miles versus the personal miles you put on your vehicle. You can only deduct the percentage of the lease payment based on the business miles traveled, and you may not include any personal use miles. Number two, leases can require down payments. If yours requires one, the deduction for the down payment amount has to be spread out over the terms of the lease rather than being deducted all at once. So for example, if you put $3,000 down to bring your payment down on your lease, and your lease term is 3 years, you have to spread that $3,000 over the course of that lease term at $1,000. So you only get $1,000 deduction in the year that you bought it. Number three, there's an annual limit to the amount you can claim for your lease. If the amount of the lease payments claimed as business expenses is more than that limit, your deductions may have to be reduced. I would suggest that you talk to your tax advisor about what that annual limit is because it changes yearly. Number four, you can determine the amount of your car lease tax deductions one of two ways: by calculating your actual expenses or using the standard mileage rate. So, if you choose to calculate your actual expenses, they consist of knowing the legit cost of maintaining the vehicle for business purposes, such as gas, oil changes, tires, repairs, etc., as well as any other mandatory fees such as registration, licenses, insurance, lease payments. If you're going to use the standard mileage rate, there are, of course, certain criteria you have to meet in order to use this option, including using the standard mileage rate for the entire length of the lease period, and for renewals as well as the cents per mile rate for the current tax year. But make no mistake about it, there are other musts and must nots to keep in mind when going with the standard mileage rate that would be best discussed with your tax advisor. So, we would like to thank you guys for listening to us today, and please follow us on your favorite podcast. Thanks. Bye.